Hey, how's it going, everybody? I'm just going to do a quick sound check as we begin this mentor session. Markets just opened here, and Sunday, 5 o'clock Central Standard Time. It's the 12th of January, and all these levels we were buying into the close are popping up here. So, we're going to be talking about some things here. Um, yep. Once again, keep the chat here to the YouTube channel. And still have yet to. I know everything is like a 30-second delay, so I'm not sure you guys can hear me. I assume you can. Yeah, my volume's coming through here, so somebody could just type in the chat and can you hear me? Well, no one's responded yet. Okay, there's a response. Thanks. Jeez, you guys all that lazy. I'm sorry. I'm gonna rip on you. None of you guys responded till just now. It was a long wait. All right. Um, One of the things I want to go over uh, today here, guys, is a couple of like the bigger reversals, and this is something very rarely, believe it or not, do I actually learn something new in trading, or like something that I really want to like add to my war chest of tools. But I kind of felt like I did last week, and that is really looking for setups, most importantly after like trend breaks or potential reversals. Now, I am not one to try to uh, pick tops or bottoms. Okay, that's not my goal. My goal is not to pick tops or bottoms. However, highs and lows within the ranges do add a really good opportunity for trade setup. So when you're looking at a chart, um, when you're looking at a chart and you always want to be aware of where we are relative to the daily range. That was a heavy delay. That was a bigger delay than normal. That was like a full minute delay. So that's why I thought you guys weren't responding. Maybe you were, maybe you weren't. But when you're looking at a chart relative uh, in a range on the daily chart, it's really important to know where we are relative to the range. So this is just bonds. It's like the first market I go over every morning. When the bond market is up here, this is like the 38.2, the whole halfway back, right? So that's like near the top of what the range has been literally since November. And when the bond market is down here, this is, the bottom of the range that we've been since November. And then you have, mid-range, right? So then you have mid-range. So where do you guys think, and this is actually like pretty simple when you look at it, but I don't think I personally pay enough attention to it, but where do you guys think the best setups for shorts are? Where the best setups for shorts going to come from? Okay. Where are the best setups from longs going to come from? And I want you guys to, type in the chat. And then, where are the setups you kind of want to stay away from? Well, it's clearly obvious that the best short setups are going to come from relatively the top of the range. The best long setups are going to come from, relatively speaking, the bottom of the range. So it's important to recognize that if you're buying a long at the top of the range, it's probably not a good setup compared to buying a long at the bottom of the range. Okay? So, bottom of the range, top of the range, bottom of the range, top of the range. longs at the bottom of the range and shorts at the top of the range need to be paid attention to uh, a lot more than really any other setup. So when we're going into the day, okay, when we're going into the day, it's important, and I'm going to do more of this as, I go through my morning trade plans with you guys every morning. It's important to realize which markets have the potential of setting up in exactly that. So we are going to want to really pay more and more attention to where we are relative to the range. And is there a setup there? One of the actually couple interesting setups last week in the NASDAQ, and I'll show you guys, was, and I don't really short profit targets ever. It's not a setup I look for, but you can definitely short moves off profit targets, or if you have like a double confirmation level. So last week we had this incredible extension in the NASDAQ. Okay, this incredible extension in the NASDAQ, and that was from the high of the 29th of November to high. Traded its 38, traded its 50, and then just like literally ripped face. Okay, and those 90.13s were the profit target. Well, we went right up into that 90.13 and we started to stall. This is a 30-minute chart. Let me go down to a smaller time frame. We went right up into that profit target and then started to stall. We built a wedge at highs. You have 3 touches of the trend line. Look at that. That's like perfect. Okay, and then we broke down. So literally from this 90.13, the high on the first test, we dipped in 10 points. And we ended up falling all the way down about, call it 60 points. We dropped about 60 points, which was really one of the best moves all day. And then there was the reversal as well. So, that, not that you want to short into a freight train, and the NASDAQ was definitely a freight train higher, but as we were hitting this profit target at 90.13, the NASDAQ, we are at all-time highs. This is a significant profit target, but if you can find something, finding a solid entry, because there is a couple solid entries in here on the micro that lead you down basically into the next pullback, it's going to be incredible. It's going to be a better setup than just like anything else. So we actually ended up, delete a couple of these draws here. We ended up pulling down into an extension, okay, which I had drawn up that day. And then we had non-farm payroll on Friday, right, guys? So going into the morning, off that extension, our profit targets were 90.54. 90.54. Well, that profit target hit, okay, and really, it was a really sloppy short setup here in the NASDAQ. It was super sloppy. In fact, if you look at, there was a sequence up here. It was an extension, 2 target, the same anchor new high, 2 target, we had the same anchor new high, and that when that broke, that's what ended up setting up short. That was a really, really sloppy short, but this breakdown here, that was really the short to sell into. And all we did was come into, and this was the level I gave at the end of the day, the same anchor new high. But as these indexes get, closer and closer, or, they're basically all at all-time highs right now, but it's important to note that the better setups are, the halfway back longs that are coming from the lower part of the range. So if we set up in, one of the things I'd like to see set up this week, which who knows if it'll happen, is a full 50% retracement from Tuesday's low to high. Okay? That is going to be a better setup if we pull back into this level than, this extension is right now at the top of the range. This extension was a fine trade. It just traded right at the end of the day, which made it a little hard to hold. But one of the markets that is going into the bottom end of the range, and I really want it. This is a crucial setup, I think, this week that we're going to see in it might even be setting up right now. But I have this trend line drawn. This is going to be basically a third touch. So you can draw it from here to here, to here. So you have a third trend line touch. There's an extension sequence. Okay. There was this low to low that traded to profit target. We actually just came off that second target. Same anchor new low, traded off of 38.2. We have a profit target of 58.03, which I don't even know if that completes. We'll see. We have a full halfway back long on the daily. Okay, we have a full halfway back long on the daily at 58.32. And you're going to have like the third touch of a lower trend line. And lower trend lines definitely do work. Okay, they definitely do work, especially in oil. Third touches of trend lines, and I've dropped this up in the chat before, but third touches and fourth touches of upper and lower trend lines in oil are just like a really fantastic trade for whatever reason. It's like they take out stops and then they move it up. So we have all of that coming into play here. Possibly tomorrow, most likely tomorrow. The last time this halfway back long came into play, it was front run like aggressively. So the low of October to this high, first off, was the first time it was 54.58. We traded 54.85. So it's basically a 30 tick front run. And then that low to high, that halfway back was 54.87. That low was 55.02. So, 25 tick front run. 25, 30 tick front run the last time this halfway back came into play. It's a 58.32. 25 ticks ahead of 58.32 is going to be, 57s? And our low right now, let's see this, is 59s. So, just something really, really interesting. So, oil, and I don't know where the reversal is going to come from. We'll see, but there will be, I do think at some point this week there will be a reversal. The confirmation of the reversal is going to be the break of this extension sequence. That's a confirmation of the reversal. But, that's where you're going to get, even on this reversal to the upside. If you missed a long, sometimes waiting for the reversal to happen at that new all-time high is the best trade. If you missed a short, well, guess what? This reversal, when it sets up, is going to be one of the best trades all week for oil. So you can either take it on, a first test, or how do you determine when there's a full reversal of the opposing move? Well, if you're going to go to the hourly time frame, really it's important that we break above this extension short, the 61.8. So that's 60.28 right now. That actually would confirm a full hourly break of the sequence lower, and then we can look for halfway back longs. But anything more aggressive than that, I'll show you, would be like this. So like there was a halfway back short that was sold into. First it was broken to 61, then we defended it. That low to high. Okay, if you want to be more aggressive looking for a reversal, I would say like a break back above 59.10s. A break back above 59.10s would, start to be some evidence, and you could potentially look for pullbacks, but there would still be other resistance levels above. But because oil's at that bottom of that range, and like I talked about, earlier, looking for reversals that are in better low trade locations, that's going to be a really good setup. Now you have really a similar setup here in the USD JPY, and it's going to be interesting to see what happens. We're going to go one way or the other. It's really simple to say. So the 6J is the futures contract for the USD JPY. We are at this weekly resistance level, and we're either going to break out of it, and there's going to be an incredible short covering rally, or we're going to sell off back to the bottom of the range. So looking for a sequence confirmation here in the USD JPY is super important. Super important going into Monday. And let me actually take a look at our news event calendar. I have it printed out. Where did I put that? I can actually just pull up the website. Let's take a look at some of our news events this week that are important. So Canadian Bank of the Red Star event. So the New Zealand dollar has some news, and so does the Bank of Canada on Monday. Tuesday, CPI, core CPI for the USD, so that could move JPY. So really, there could be a move. You also have Bank of Japan Governor Kuroda speaking. So I would imagine that the move in the yen is going to come from, these economic numbers out of the U.S. dollar, and then you have the Bank of Japan governor speaking on Tuesday evening at 7:30. So that is probably when the move is going to happen. Right now, there is an extension sequence from this high to high. It traded once, traded twice. The profit targets the high. Same anchor, new high here. It's technically held. It's technically defended at 61.8. So we are still in a long trend. So really, if this 109.40 holds, this yen is going to continue to rip, and it's breaking out of a weekly resistance level, and it's probably going back towards the 2019 high at around 112, or at least to the 61 at 110.69. And that's a big move. That would be a really, really big move. You can see we had a destructive candle, super bullish candle. It's a very bullish candle. In fact, that's bullish engulfing on the body. You could get a continuation this week. So this is, although I think whichever way, this is a very pivotal trade location for the USD JPY, and it's really just important to find the sequences and trade them. But, that's one that's at the top of the range. AUD USD, guys, last week this setup was incredible. This was an incredible setup. This halfway back, it was a daily leg start. Okay, where are we at? We're at the bottom of the range. This is the top of the range. This is the bottom of the range. It's a daily leg start. We held that level for 3 freaking days. This has now begun to move up. We came out of the Australian retail sales, I think it was Thursday night. Thursday night, Australian retail sales actually created this rally. There was this first halfway back that was really sloppy, and I'm going to just show you guys something that I've noticed. And this is when you have like a news event, like we had this rally, like it's off a news event, it's an instant bid, we come back really, really fast because this was like a reactionary trade. Come back really, really fast, we actually break the draw, come back, and then we trade the draw again, and then it holds. Well, then that last touch of the 50 became the anchor. That last touch of the 50 became the anchor for whatever reason. And then that anchor was actually used again and again, which is really strange. So the anchor in the AUD USD is this low here at 65.59, and that's only known in hindsight. That's known after we complete this draw. Then it's bid again, and then it's bid again. And now in a series of traditionals, that low to high has now been bid. Ideally, what I would like to see for an entry this week in the AUD JPY is a full halfway back from lows, but I want to be aware that this anchor was used many times before, so that anchor equals a 5 pip front run of the halfway back, the full halfway back. So we just want to be aware of both of those levels. This anchor is a 5 pip front run of the full 50% retracement long. Okay, and we could just continue straight up in a series. These targets are huge. It's at 71.16. This is the entry into a swing trend. And as soon as we clear like this resistance zone here, it's going to be clean sailing for the AUD. It's going to be real clean sailing for the AUD. So that's going to be a move we're definitely going to want to be paying attention to. You also, towards the end of the day, you had all of the currencies. The currencies are all in this dollar weakness trend setup, but they've really spent a lot of the week failing to hold their support levels. We're finally broke the short trends we were in. And after the break of the short, what do we look for? Pullbacks to buy. So the full 50% retracements, we're at the lower end of the range here. These are big levels after trend breaks. It's going to be something to watch. Last week, we had these 50% retracement touches. It traded. We just dilly-dallied around them, and we were holding shorts. Completed that target. Held the next short. Completed that target. Held the next short. And then we finally broke on Friday out of the non-farm payroll. Non-farm payroll broke the trend in the currencies. Great Britain pound still falling lower. I think the Great Britain pound could just possibly retest the lower end of this range. The GBP USD still really failing from resistance. There'll be a short setup. That short setup will trade, and then it'll break, and then we've held a long, but we've been unable really to continue. You'll get a free trade. We'll trade the support. We'll move higher. You can take half off, get a free trade. We'll trade the support, move higher, take half off, get a free trade. I mean, literally 3 times in a row this gave free trades. Now we've broken it. So we have to reconfirm these support levels all over again. These support levels are now invalid. This halfway back long is no longer valid, and we have to continue to expect price to move lower. Gold broke its short trend. The full halfway back long lines up with a daily retest of the extension. There is a daily extension. We began our rally in a halfway back long. That daily extension from, let's like 1492 area to high, it's 1552.4. 1552.4, guys. We broke our short sequence. There was an extension here. Traded once to target, twice. Participation. Non-farm payroll comes out. We rallied straight to target. Now there's 2 possibilities. One, now that we broke that short, this is the best level. This is the best level, hands down. 1552.6 is the best level in gold. The more aggressive sequence would just be this low to high. This would be the more aggressive sequence. And that would be 1556. I want to see 1552. Okay? That is absolutely the best sequence there for gold. But I'll set alerts at both those levels. Let's see. This is a really clean sequence here in bonds. Once again, we were at the bottom of the range. When we had this low, there was an extension. That extension completed. You then had a same anchor new low. That same anchor new low failed, and then this halfway back long just stuck. It's perfect. Totally perfect. We'll see if we come into it again. That would be at 156.27. All right, so that's really the important thing, guys. Where are you looking for your trades? And I just want to point out like where they are relative to the range. All right, because the better setups are going to come from important levels, and not every market is going to have an important level. Right now, I think the most important levels in any of these markets that we watch are the USD JPY is at a really significant level. It's either going to break out and just start ripping, or we're going to break the long trend and we're going to pull back heavily. You got oil coming into a weekly halfway back long, and you have third touches of trend lines to the downside. So that's pretty significant. You got the AUD beginning and continuing a daily long sequence. That's a very significant pattern there. And gold has a double level. It's a halfway back from lows on the hourly chart, as well as a daily retest. So That is the ideal setup. So when you want to be selective with trading, especially those of you who like aren't at the desk all day, or you're just in general, you want to pick your spots in trading. You don't need to take every single trade. You don't need to take every 15-minute pullback on the ES. If you zoom out and kind of look for setups that are closer to major levels, you're going to get better reactions. You're going to get bigger runners, and you're just going to trade better. So, Jonathan, question: when you have an uptrend and a bunch of draws up that traded their profit targets, then the trend breaks, what should you look at as the support level below? Should it be the full 50? So the ES is a really good example of that. The thing is, you can just not trade support. You can wait till it confirms. But I mean, really, the full 50 is where we should go. Anything else, it's unknown. It's really just not known. There's always potentials, right? So there's like when we broke. If you look at the ES, there was like a traditional sequence on the RTH time frame, and we broke that on Friday, and we set up short. Well, when you break that, you can go back and look at all of the potentials. So I was looking at, oh man, we had this extension. I think that might come into play, or there was this traditional, but like you're not gonna know where that support level is, and until it confirms. You do not know where the support level is until it confirms. So really, you just trade the shorts until they break. Once we start completing shorts, like we did in the ES, so it was halfway back short for the day, to target, next measured move, we just stuck a 61. Until this breaks, you can't confirm support. This could go straight down to target. And also, you still have this full 50% retracement short at 73.5 that could be valid. There's only variations of supports below that could be the possibility, but we do not know where those supports exist until we break. Like, here's a good example on Wednesday of what you do. So Wednesday into the close, we were holding like traditional sequences all the way up. And then we held this one, and then this should have been the next move, technically, or you could have looked at an extension. We broke trend at the end of the day on Wednesday in this like ridiculously aggressive sell bar. I was long in this, and I got massive slippage, which I like never get in the ES. And we just shot down. There was no known support level here that I would have bought in advance. All right, this is unknown support. You're going to rally from unknown support all of the time. But when we came up, so that, we broke the long trend and then we set up in a short. There's the short. We reacted. Well, the shorts weren't in control. We reacted off the short, very quickly for like, 2.5 points. Excuse me. And then we broke the long. And then we broke the short. And when we broke the short, we set up long, and then that's your entry. So if you guys remember, in the morning, we had set up in this long setup after we had broken the shorts. But that's what's going to have to happen again now. That's what's going to have to happen again here in the ES. We have broken... We need to break the long, we need to break the short to find out where the long is. Otherwise, it's really just speculation. And that's when you're just going to start drawing every 50% below. And when you're drawing every 50% below, like, you kind of just end up taking every freaking trade. It's the unknown. We're just in the unknown when you break trend. And that's when you just sit on your hand. You're no man's land. You sit on your hands. The only known right now is that we were sold into a short and we completed target in a close. And this is the next halfway back. And also there's a possible valid 50% retracement short. Those are the only knowns. We very well could come all the way down into this full halfway back long. I don't know where the low is going to be, and nobody does, because the last move that completed was a short. But it's a whole different week now. So that, everything that happened Friday could be totally, completely forgotten. So the only thing to do is, if we break out of the full 50% retracement short, then we just have to wait for a setup long. Once we break the short, 32.77, we confirm the support, but I don't know where the draw is right now for this long. And I could go back and look, but on the RTH session, we had traditionals out of lows. Here we are. We had a traditional out of lows, okay? And that had an extension. That same anchor new high broke. So, it could be maybe this next traditional. It could be this full halfway back long. I don't know where the support is. And I don't even know if there is support, because we, right now, are in a downtrend. How far back should you go to determine the range area? I would just go on the daily chart. I mean, it's, when we're in all-time highs, the only thing you really have for the upper part of the range is like profit targets and third trend line touches. But a halfway back near the previous breakout. So this is the previous all-time highs, right? A halfway back long here would line up with that all-time high of December 27th, which is like the high of the year last year. So to me, this is a damn good level. Right now, Friday is bearish engulfing on the daily after a hammer up. Like, that's a daily bearish candle. I don't know if it's going to continue, but the setup says short because we completed a short last. So, anytime you're just stretching for support, like right now, I'm just like, okay, like, I could say, oh, maybe it's the halfway back from Wednesday's low to high. Like, that's a pretty random draw to me, right? Like, RTH, that's the halfway back from after we got attacked by Iran or whatever. Like, I mean, it's random, super random. It's unconfirmed. We don't know it exists. So what do? You just ignore it. And you wait for the full 50% retracement short. And if we break the short, then you can say, okay, well, this level had enough buyers to break the shorts. But right now you can't say that because we don't have that information. It's unknown. It becomes known, with time passes. Or we hold the short and we complete it, and or we hold a sloppy version of the short. But what I do know, what is known, and you want to go for more of the known ideas, is a 50% retracement long from the bottom of the range here too high. It's halfway back, lines up with the previous highs of 2019, and that's probably a better level. That's what's known to me, right? So would I rather wait for something I have more confidence on and be patient, or do I need to buy every support level that I see? All right. Yeah, so once we break, you look for the next traditional. Exactly. And, if you don't know what's going on in the market, you have to find out where the draw is. So, in the Great Britain pound, it was a halfway back for the day. And it traded, and then it broke. When it broke, we set up long. This was a safe trade. Okay? There's you can draw long here, but it's going to be and it might run to target, and it did, in fact. And it's sloppy, though. But are you going to pick a bottom, or are you going to wait for a trend break and buy the safer pullback? This is the safer pullback, right? And then you just look for a free trade. Okay, so you take half off at a first target, the same size as your stop. And, if it comes down, stops you out, oh well, move on to the next trade. If it runs the target, great, that's what you want. So, just be aware of, I think the big thing is be aware of the knowns and the unknowns. Are you taking unknown trades, unknown support levels? Are you rushing to conclusions? Are you buying every support level that's trading below? Or do you find yourself being patient for setups that look good? Setups halfway back longs that are at the bottom of the range, right? What's the last move to trade to target? That's what I always look at. The last move to trade to target in the ES right now is a short. It's a whole different week, though. Things could change. I don't know if they will. In the yen right now, the last move technically to trade the target is a long. And the halfway back long is held. So only if we broke below 109.40, the known right now in the USD JPY is that we have completed extension longs and we are holding above the 61.8 of the longs trend. That's the known. If we break below the 61.8, the known becomes a trend failure, and then you can look short. The known is also we're at the top of a weekly range. And most likely, if we start getting above these highs, this yen's going to break out. And we very well could break out into, like I said, those news events for the USD JPY are on Tuesday. All right, we have Kuroda speaking, and then there's some dollar news. One of the possibilities are we could actually rally into that news event. Who knows? Like overnight, we could stage right. That would be like call it we're trading 109.60s, 110.20s would be like the target or right around there. That's a 60 pip rally. We could rally 60 pips into the profit target. News could come out and we could reverse. These are all potential scenarios. But right now, the known is we're holding extension longs. In the ES, the known is we completed shorts to targets and we have not confirmed any supports. There's no confirmation of supports right now. Unfortunately, that just takes time and it takes rallies. So you might miss out on this whole move up, but that's okay. Like if you looked at the low that we made during the whole chaos of the overnight session, we confirmed our longs by breaking our short trend. There was an extension. There was a same anchor new low. We blew out of targets. We started a new extension. Same anchor new low broke, and then we began a long trend. Okay? We broke the trend lower and began trading longs. That's the safe way to trade. Now, in the ES right now, if we break above this next halfway back short, you can technically call that a trend failure, and you could begin looking for a halfway back long. But the full break of shorts is all the way at 77s. The thing is, if we break this micro short here and then trade straight up into 3274s, that actually gives us a short setup to go lower. If we break into this 61.8, call it just a 3272, and then pull back, what that would mean is that there was no new short setup and that this long setup is safer. Does that make sense? But if we go straight into 73.5, that's a short setup, and that could break the long setup. If we just pierce and then set up long, there's no short setup. There's just a long setup. How can you look to buy a halfway back long at the bottom of the range if you need to wait for the 61 break? Good question, David. So, one, you can just wait for the confirmation of the micro. But the other thing is, that's a really this halfway back long from the bottom of the range is a much more significant level than some random draw, okay? Some other random draw. This is a previous all-time high retest. It's a breakout retest. There's multiple levels there. Now, when that level right now is 32.48s, when those 32.48s, you could follow like the micros down and wait for a micro break if you want. But the reality is that level is much more significant than this right here. We kind of rallied from a gap fill. It was a gap fill on the low. But this random draw here from this swing low of Wednesday to high, it's traded before, you could argue, but it's just not in the sequence. There's always potentials. But you gotta take the trades that you think have a higher probability. And this would be more of like a double confirmation level, David. It's the full half. It's the halfway back long for the year at this point. So if you think about that, it's a halfway back long for the year. It's a pretty big level. So when you start your analysis, you look at the daily regular trading hours and extended. No, I actually always look at the extended, and then when I find that the extended has gotten sloppy, I begin looking at the RTH. I always look at the extended first, and if I see that there's something different here, I can't find a sequence. This was a traditional sequence. If I can't find a sequence, then I will say, okay, well, is there something I'm missing? Does it exist on the RTH? And sometimes that's the case. But I do start off, definitely, I start off with the extended session turned on. And then I move to it off if I find that something's funky. So right now these are the only knowns. And it might not be a good idea to sell into that next move, into a Sunday night open. Those are other things you have to take into consideration. Would you rather sell the continuation or the full halfway back short? And the other thing is, if you're just looking for a free trade, if you're trading that free trade strategy that I taught a couple of lessons ago, all you need is a little move off. You take half off and you let it coast. There's no real way to know for sure what's going to happen. There's no absolute. Now, the NASDAQ, you could argue, is a known. Okay, the ES is different. The NASDAQ has a known support level. Because the NASDAQ had this extension once to target, twice to target. This was the third time. That's why I drew that level up in the NASDAQ. This is a known level. And you also had, this extension, which technically held as well. We blew through profit targets, but, I would say at this point in time, this is the more accurate extension, the RTH extension. Because it traded to the tick. That is a known support because we have traded it. But there is no equal sequence. And that's why the ES really hasn't actually been as technical as it used to be. There's no equal extension sequence here in the ES that we have. The ES does not have that setup. The NASDAQ does. The NASDAQ's way stronger. Also, when we came down on the daily in the overnight session, the NASDAQ had a valid extension sequence from the high of the end of December, or it was the end of November, early December. The ES actually broke that previously. That extension traded, I believe. It traded its 38.2, retested its 50 and broke. We actually completed those targets. Now I'm now just realizing that those targets completed. Now, if you go and get rid of the extended session, guess what? The ES never broke it. The ES never broke that extension during the regular trading hours. So that's when stocks are trading, right? Obviously, that's what makes it so much different. So the RTH I do give more weight to, whether it's not. So that extension broke in the after hours, but it never broke during the day. I'm just now realizing as I'm walking through this chart that we completed on the high that negative 23% profit target. So that same anchor new high is highly possible this week. That same anchor new high is a total possibility this week. And that could be all the way back to the bottom of the range at 32.25. We could fall all the way back down there, no problem, by tomorrow. How to use fibs in correlation with leg starts. If I got a fib that lines up with the leg start, the bigger the time frame the leg start, the better. Daily, and then basically 4 hour and hourly. So let's see if I go down to It's kind of hard when you turn the extended session off to get a 4-hour leg start. So you kind of gotta put the extended session on. But let's go extended session here and see if we got anything. So the 32.35, that's a really solid level. I actually really like that level, 32.35.75. I don't see any leg starts here, but you know what it is? That level is the close of the year. It's the swing low here. It's the close of this day. It was a previous gap fill. It was support. It was support. That level is pretty significant if you literally are just looking at this chart. Resistance, support, literally close of the year, right about where we opened. Support, support, battle zone, gap, resistance, support, crash, resistance, support. So, I mean, if you want to hit the hammer anytime this week, it's actually probably this level right here. And that's the type of analysis you got to do to be patient. Now, if we trade 32.35.75 this week and you miss it, you're doing something wrong. Doing something wrong. That's a huge level. In regards to the NASDAQ extension, since it's a known support, should we still take the full halfway back short consideration when you're looking at longs, or can we just disregard completely and focus on the longs? You can totally disregard the shorts completely in the NASDAQ because the ES did not have a trend below, the NASDAQ did. So if you were to pick one over the other, I would trade ES shorts over the NASDAQ because technically the NASDAQ is still in a long sequence. The NASDAQ breaks below its short, so if the NASDAQ breaks 89.45, this short's going to be valid. Now, there's a counter trend sequence leading us down there. So you had once to target, twice we've stuck to 61. But because we've held known support in the NASDAQ, I would not favor shorting the NASDAQ. I would go with the ES. And I'd actually have to look at the Dow sequence. The Dow extension, so the same extension, which is from... It doesn't even exist in the Dow. The Dow's been weaker because of Boeing. Boeing's the most important stock in the Dow, and it's doing the worst. So, the Dow's just, totally has its own chart right now. This extension doesn't matter. RTH or extended session has not held. Actually, let me see here. So, it would be here. In the Dow, it would be RTH to 27th to high. Oh, you know what? We did hold it. This is why I need to do these lessons every week, because I learn as I teach. So yeah, that 27th to high, believe it or not, look at that. We held to target. We actually retested that low. That same anchor new high did technically break a 61, but you can see there was a buyer, and then let me look at the extended session here. Yeah, extended session high is that target. It's kind of interesting. So what I would do now is I'm actually going to draw this extension to the new high in the Dow. And I'm not going to draw it to the extended session high just because the extended session hasn't held, right? The extended session hasn't held. The extended session is still reacting off profit targets. And that's because if you're long, you're still going to sell in the after hours, right? So we're getting these profit targets hit in the after hours, and they're coming, the market is reversing off of them. Well, that's because if I bought the 50% retracement during the day, well, guess what? If the market's opened at night, my target is still there. But we're only holding them during the regular trading hour session, and that's the important note. And these are just things you have to know about the market by looking at it. This stuff is going to change, and this is why trading is always, I don't want to say, trading is always changing, right? There's constant variables in trading. And this just happens to be one of them. So what do we have now in the NASDAQ? Both NASDAQ, Dow, ES, they're all in these extensions on the daily, and that's probably where we're pulling back into. So these levels, where's the bottom of the range? This is a A+ setup. This setup is a 10 down here. I don't know if we're going to get here, but if we do, it's a freaking 10. It's bottom of the range. 50%, same anchor new high extension, known support. Known support. What actually is a leg start? A leg start is the beginning of a 3-bar move. It's a code I wrote. And so like this white dot here is a leg start. This is an indicator that I sell. I mean, if you're interested in getting them, you can shoot me a DM. I have to build the courses for them still. I mean, a lot of things, I'm just basically rebuilding an entire course base. It takes a while, but it's the beginning of a 3-bar move. So this white dot here, it's a 3-bar move. Our best example of a leg start halfway back double confirmation is the AUD. You had a beginning of a move, this white dot, and then a halfway back. That level, a double confirmation like that should be taken every time. Okay? That's a leg start. It's a beginning of a 3-bar move. One in the same direction. So you have 1, 2, 3. What does that mean? That means it's 3 consecutive higher highs or 3 consecutive lower lows. And they have to, be above those levels. And then basically that just means that that level was a demand level or that level was a supply level. All right? But yeah, that's what I got here for tonight, guys. You can see these shorts are holding in the indexes. Who knows? Maybe we'll come down and gap fill this ES and then trade that full halfway back short. But gap fill is 63.25. But yeah, guys, it's going to wrap it up for me here tonight. I'll share my levels with you guys so you guys have them. I hope you enjoyed this content. Let your friends know if anybody used to follow me at MLT that I'm back and at it at teaching. I am going to have the 2 basic courses that I have done fully up, I want to say, by the end of, not this week. I'm just going to give it to next week because it's up to my web guy and I don't know exactly his schedule, but let's see the dates here. It'll be fully up by the 24th, the 2 basic courses, and then my full course, which is still in development. It's going to be probably the most intuitive course I've ever created. That's going to be done by the end of February, so I'll keep you guys updated with that. Yeah, 1 tick is considered a technical failure, but the other thing is you got to be careful of rounding up. So, right here, this ES is 32.7141, right? Well, if you round that down to 71.25, that's a break. But really, I always round it up, right? So 71.5. We traded it to the tick. But literally, if you just dip in, it's considered a failure. I don't trade with my stops at 61s though. I trade with my stops at standard bracket sizes, so 3 points in the ES. And you'll see moves break and then complete, right? So and a lot of times the first move in a series, so this halfway back short in the ES, just bounces back and forth. But if you draw it to the new low, it's piercing 61s and then it completes. And that happens a lot at reversals. Reversals are sloppy. Yeah, this isn't broken, David, because 32.7141 is the technical calculation, and that is literally the 61.8. If we went 72s, that's a break. That is the 71.8. Is 32.71.5. That is the 61.8. But yeah, guys, there's some big levels coming into play here in these indexes. And the only one I would think would be a hard time getting back to its extension is the NASDAQ. NASDAQ came so far, so it's possible the NASDAQ just comes into this halfway back. But we'll see. This ES and this Dow, guys, those are some really good levels. And then, this oil, there's some really good setups. Wait for those bigger levels. Do your analysis. Be patient. And then just also be aware of the economic news that's going to lead us down into those. So, one of the things I do, guys, is I print this out every week. I know I go over it in the morning, but print it out because these are the events that are going to cause the market to move. So CPI on Tuesday is going to move the market, depending on whatever the setup is. So like CPI might drag us down into the full halfway back long, and then core retail sales on Thursday might be the reason we come out of it, you know? So you kind of got to like plan your moves around these news events. If we broke it, yes, you'd look for a long. But we didn't. We're coming off of it. It's a valid short setup in the ES. All right, guys, I'll catch you all tomorrow morning. Trade safe. Have a great night. Thanks for coming in and watching this. And hope you guys learned something. Oh, also, if anybody is willing to do it, I'm looking for people to submit me testimonial videos. Just, if obviously you've been, uh, my student before. If you're like one of my newer students, I'm not really encouraging my newer students to submit testimonial videos because they probably haven't taken my courses. But if you're one of my previous students and you've learned from me and you want to submit a testimonial video, that's awesome. If not, no worries, no pressure. I'm just looking for a couple of people to just share what they've learned from me. Anyways, take care. Have a great evening, and I'll catch you guys tomorrow morning.